All right. Welcome, everyone. My name is Alain Dumais. I'm the president and chair of the board of DIAC, our beautiful dental industry association. So, welcome, everyone. I want to welcome all of you to our, I'm going to say annual, but Future of Dentistry launch with an augmented agenda this year. We got 3 speakers for you. And I think you're going to find it very interesting. And I saw some numbers from the FODS, Future of Dentistry survey. Quite amazing, actually, this year, right, David? We got some good stuff this year. So that we keep on, I'll start introducing our first speaker, Mr. Robin Lesh, who is the VP of Commercial and Financial Services, GTR Healthcare at RBC, right? Well done. Long title. Mine is not that long, but I'm not important anyways. He's been in this business for about 17 years. He started real young, he told me. And he is a senior finance and commercial service leader. He spent nearly a decade before being at RBC, a decade maybe at Scotiabank or so. And his expertise spans from commercial awareness, financial advisory, and risk management, which is quite important these days. The interesting thing about, and that's the last line on Robbins, on a personal note, his wife has been practicing as a registered dental hygienist for 17 years. And even better, or not worse, but better, his father-in-law owned and operated a successful dental practice for over 30 years. So that's his real connection to dentistry. So Robin.
A hybrid event, so we do have folks online who will also be asking questions as well. So we'll keep an eye on that for you.
Thank you. Yeah, perfect. Thank you. Take this out. So thank you so much, everyone, for allowing me to speak today. We very much appreciate the partnership. We've recently become sponsors of DIAC, and very excited to be here today and talk to you about a few things. Some of which might be new. Some of it might be historically relevant, but I appreciate very much the time. So we'll jump in. Really, the focus of today is going to be on a few segments. One is, in particular, understanding really the micro and macro factors affecting practice ownership. So I'm going to touch on really the macro lens to start from a Canadian business perspective, and then kind of narrow that scope down to the dental industry of Canada in particular. So the key themes that we'll discuss, as I alluded to, macro environment of Canadian business owners, dental industry trends and outlook, what we're seeing, practice ownership. So we'll start with the startup and kind of what RBC is seeing. Acquiring a practice, I think that's a pretty relevant and important topic. And then lastly, I'll talk a little bit about RBC's healthcare offering on a national scope. So from a macro perspective, this is again relates to Canadian business owners as a whole. The sentiment amongst business leaders is down. It's been its lowest point since 2022. I'm sure that's not a surprise coming out of COVID pandemic, dealing with things like inflationary pressures, interest rate environment, cost of borrowing, and just cost of living as a whole. Canadian business leaders are feeling 69% positive. Unfortunately, that's actually down year over year from 72%. This was an interesting stat. 70% of business leaders in Canada are feeling burnout. Keep that point aside. I'll speak to that a little bit on the next slide. I thought that was a very relevant piece of the discussion. 49% of business leaders say their spending has increased in the past 3 months, yet that's down significantly from 52% in the past quarter and much lower than what we're seeing in the US. So I think that probably lends itself to a little bit about the cost of borrowing, the interest rate environment, which we'll speak to a little more. 68% of Canadian businesses are projecting revenue to increase in 2024. So there's some optimism, right? We're seeing the positive trending. 52% of Canadian businesses say they're fully funded for everything they want to do in business in the next 6 months. But again, unfortunately, that's down year over year. So that lends itself to the question of what's driving some of that lack of working capital, lack of need for business growth, I think is important. Again, probably ties to inflationary pressures, interest rate environment. And lastly, and I thought this was this is probably table stakes, is the macroeconomic concerns, and that inflation, no surprise, remains the leading concern for business owners, and as well as economic uncertainty. I think that's no surprise to anyone in this room. So just wanted to touch on that point that I spoke a little bit about in the previous slide there on burnout, right? What we're seeing from a burnout perspective. So 7 in 10 Canadian business leaders are feeling burnout. This is up from the start of 2024. And I think, again, that continues to trend and tie, I think, heavily with the cost of living, the environment we're in, the cost of borrowing, the inflationary pressures that we're seeing. And I think what's also important to note for those who are practice owners and business owners, the employees are feeling that burnout as well. This is a trickle down effect. So I think when we're thinking through which we'll cover a little later on, the business owner portion, it's important to note that we need to remain focused on ensuring that our employees feel supported to ensure we have success and continuity in business. And then the one piece, if you see at the bottom of the slide there, talks about how we compare to our neighbors south of the border. It seems that business leader burnout is actually trending much lower than it is in Canada, which I thought was an interesting statistic. So now I'm going to talk a little bit about some of the IBIS findings, the dental industry trends, a little more specific to our industry. Canadian dental practices typically experience steady growth year over year. Revenue has been growing at a compound annual growth rate of 1.8%. It's expected to reach a total of 21.7 billion as a total industry, with additional expectations of 2.6 increase in 2024. So again, we've talked about some of the challenges we've seen. I think the positive here is we are seeing positive growth in trajectory from a growth standpoint, so from the business owner perspective. Some general dentistry, general industry trends and insights. We're going to see some presentation later on today about the DCP. New national-wide oral health care plan. It was launched in May. That's obviously a big impact to what we're seeing in the industry. We're seeing population density, which is fueling additional growth within dentistry and within Canada. And the big kind of some of the key messaging here is patients continue to value reputable practices, right? So it's the quality of the work, the quality of the services that are being provided is what's driving growth and what patients have come to expect. What is RBC seeing? So this is, again, from a national lens perspective. Continuation of consolidation by DSOs remain prevalent. So we're seeing consolidation within the marketplace. Many clients, of course, view the DSO option and selling to a corporate as being welcomed and part of their succession planning. I would say probably in the last 6 months or so, at least from a regional lens, if we're thinking about Ontario, we are starting to see a little more private practice sale. So I don't know if that's unique to our market or if that's a common trending across the country. Practice ownership, another trend that's quite prevalent is from a practitioner standpoint, we're starting to see practitioners take on more complex and higher margin procedures. So that probably, I would say, if I had to draw a conclusion, that perhaps ties to profitability of the practice, the cost of borrowing, operating costs, all the increases we've seen. We're starting to see practitioners take on more of those procedures in-house versus referring them out. So that was an interesting trend. Labor pool challenges, I'm sure many in the room and online have seen. It's difficult to find staff, right? It's not easy, whether it's front-end staff, whether it's the reception, whether it's assistants, hygienists. It seems to be becoming increasingly challenging. The cost of living is driving a lot of that, right? To be able to live in big urban centers, there's a high cost of living. The wage, that's obviously putting pressure on wages as well, which in turn then drives impact on profitability for the practices. And lastly, goes without saying, I mean, I think RBC views this as an area of opportunity as well. How do we connect with our patients and with our clients? The need to continue to remain digitally enabled. Clients are digitally enabled. Patients are digitally enabled. So how do we find ways to connect with them outside of traditional advertising and media is a key area of focus. Forward outlook. So some of the information shared from IBIS over the next 5 years, conditions continue to stabilize enough for dental practices to experience more a kind of a normalized, steady growth. I think that's a positive outlook. We're expecting disposable incomes will continue to rise. Cost of living, the challenges we've seen as of the last couple of years with some of the interest rates, the rising interest rate environment we were historically in, will likely alleviate some of that pressure. Consumer confidence is set to rise. I think that again translates well into spending on non-urgent care. So that's also another positive, I think, for the dental community. And just an overall revenue statistic, but forecasted compound annual growth is expected to rise to 2.1%. Historically, it was at 1.8% last year. And again, continued growth within the industry as a whole. So all to me positive line of sight on future trends. The last piece I want to talk about as it relates to the macro environment is a pretty relevant topic, the interest rate environment. A lot of folks have different views on what that looks like. I think, you know, we've obviously, everyone is well aware we are in a declining interest rate environment, right? Dealing with, we've seen improvement in some of the inflationary pressures that then translates into affordability and cost of living. What I thought was interesting, and this is actually very recent, our capital markets group shared some insights actually this week on expectations. So I'll just share some of the bullish expectations they have around interest rates. So terminal interest rate was originally projected to land at 3% at the end of 2025. This expectation is now changing. And again, this is just an opinion, the economists of RBC, so don't hold me to it if the rates don't drop as aggressively as we're suggesting here. Right? I've said it, right? We're obviously projecting, the economists are projecting a 50 basis point drop in December of this year, which is an aggressive drop. That follows the 50 basis point we saw in October. And I think most importantly, they're suggesting there's going to be at least 2 more rate decreases at 50 basis points each in 2025. I think originally they had anticipated for a lower anticipation of a drop. So that just, to me, lends itself to more of the economic factors. We're hearing a lot from, you know, south of the border. What are we seeing from some of the potential changes in leadership south of the border? What's the net impact on our economy as a whole? I think some of the forecasting likely ties into that. Okay. So now I want to pivot. That kind of gives us a high level view of what we're seeing in the industry, some of the outlooks, but talk a little bit about what's, I think, an important topic, and that's practice ownership. I'm sure there's a lot of folks who are very familiar with this topic. I wanted to drill down and dig into what we're seeing within the market, some best practices, some things to cover as it relates to both startups as well as acquiring existing practices when making these decisions. So some of the stuff, again, may not be new to folks in this room, but I think it's relevant that we talk through what we're seeing from our end. Some of the key considerations for startup, you know, the location being crucial. At the end of the day, you know, a lot of the urban centers are highly saturated with dental practices, and making sure that we find a location that has opportunity. We think about, you know, the surrounding areas, such as from a residential development standpoint, where are we going to get and attract our patients from? What are the plans for that area? Is there a lot of development, redevelopment happening that could lend itself to an excellent, to a good area? What does the competition look like, right? Is there a number of practices within a close proximity of one another? That will present challenges if there's, when looking to start up a dental practice. Other considerations, you know, how are you going to build your clientele? I think we talked a little bit early on about what's the strategy look like from a go-to-market, as well as connecting how our clients and potential clients want to be connected with. Are you willing to work extended hours, accommodate new patients? I mean, these are some important considerations when looking at a new practice, a startup. And what is your level of comfort from managing the HR side of things, right? Hiring, retaining quality staff is crucial. Some of the pros and cons, low cost barriers to entry. So typically when we think of startup versus acquisition, typically your cost to acquire is less than that of acquiring the goodwill of an existing practice. No surprise in this industry, the banks are offering up to 100% financing on fixed costs and working capital for those practices, making it attractive and a venture for folks to get into. There's a lower, I talked about lower overall cost build out versus acquiring goodwill of an existing practice, and typically lower cost of borrowing. This is one of unique industry segments where lenders typically provide more attractive and favorable rates than any other industry that we experience. So those are all some of the advantages, and then some of the disadvantages for a startup: lengthy build out periods, rising trades and material costs. Are all important, especially now. We're still seeing continued challenge with trades and the cost of borrowing and building. The cost of build-outs being challenged for some of our practitioners. The saturation in many, especially the urban markets. There's a lot of practices within a relatively small radius, presenting challenges from a growth perspective. Lease negotiations. So we're seeing a lot more terms for leases being challenged. And what I mean by that is things like demolition or relocation clauses within those lease agreements. They can, just to give you an example, I mean, a demolition clause could be, within the landlord can provide you with 90 days notice, at which point they can demo your practice, right? So those are important considerations when looking at a startup. And lastly, the timeline, right? So it's about understanding as a business owner, what is your need from starting to build cash flow, right? You need to be able to carry levels of debt to support this. What is your appetite or ability to sustain that level of debt while you wait for your practice to be built? Crucial for planning and success. Summary of requests in the mission statement. I think this sometimes gets overlooked, but this is so important when we're looking at doing a startup business. Like, we can all get hung up on the numbers and what cash flow is going to look like, but I think when we take a step back and having discussions with clients about wanting to build out and start a practice, understanding what they want to do, right? They have a vision for their business, and I think it's so important that they're able to articulate that, whether they're looking for financing or just looking to proceed using their own resources. I just think having a clear, definitive mission statement as to what they're trying to accomplish is so crucial. The management experience and strategy that ties to, how are you going to go to market? How are you going to manage your employees? What does that all look like? Marketing strategy, we talked a little bit about that. Growing your patient base. Location, leasing versus owning. There's obviously two very distinct differences between the two. What makes most sense? What can you afford? What is the long-term viability of your strategy? The competitive landscape, how many practices are in close proximity can really hinder a new startup's practice in terms of time to get to profitable, or lengthen that process. The staffing and HR planning, this again sometimes is overlooked. We're seeing challenges now where it's tough to hire and retain quality staff that want to be paid a premium, and that drives implications for the practice. SWOT analysis, I won't elaborate on that, but lastly, and I would say important, but is the projections, right? What is your cash flows going to look like? How are you going to be able to maintain the debt, the operations of this business, and have a plan in place to facilitate? What's your worst case, best case scenario? I'll pivot now into buying existing practices. So there's a lot of key items within that should be considered when you're looking to buy a practice. Some of them are pretty tangible in nature. Others are, I would say, a little more intangible, and good considerations for those that are looking to acquire or looking to acquire a second or third location. You need to give some thought on the revenue plans, right? Are they a good match for what you're looking to accomplish? Are the client demographics a good match for you and your view or vision of the practice? How compatible are your objectives and personality with the staff? That one sometimes gets overlooked. You may have a clear thought on how you think a practice should be run, but it's tough to then go in and implement that into something that's already well established. What are terms and conditions of the lease? We talked a lot about leases and some of the challenges we've seen there. The location, right? We talked about owning versus leasing. Is the practice location that you're looking to acquire? It's an existing practice, but is it set up for future growth opportunity? Does the client mix suit your interest? Does it align with what your vision is of the practice? What is the current revenue stream? I mean, that goes without saying. And then what's the reputation of that practice, right? Doing a little due diligence, perhaps it's Google reviews, perhaps it's other forms of getting a sense of how patients feel about that practice, I think is vitally important. And then through the transition piece, what agreements are in place with the vendor to help with transition, ensure that patients are taken care of. I mean, we've seen a lot of success when an associate buys into a practice that they currently work at, but that's not always the case. So what does that transition strategy look like, and how will that impact both the patients as well as the staff? Pros and cons, advantages. It goes without saying, you're buying an established patient base, so stabilized cash flow from day one versus that of a startup. Opportunity to implement operational efficiencies. So when you're making decisions on buying practice, it should be looking at how can I, improve efficiency? How can I build growth into that practice as well? Some of the disadvantages, you're typically paying a premium for the practice goodwill and the patient base. HR and staffing related challenges can sometimes be an issue when we think of severance for long tenured employees can be something that's borne by the vendor or the seller that needs to be uncovered up front when you're doing due diligence. Challenges with vendor agreements. We've seen a lot of times where there's acquisition that occurs and what is viewed as a pretty seamless transition turns out to not go as planned, can lead to challenges. And lastly, but not least, the lease terms, right? Understanding what those lease agreements look like, making sure you have the proper due diligence done, because that can actually affect value in the future. Some of the best practices, having an appraisal. I mean, this goes without saying, whether you use financing or you're self-financing an opportunity, you need an unbiased valuation outside of just the core cash flows of a business. There's a lot more to a practice than just the numbers. Reviewing the dental software, existing active patients, what that looks like, what the hygiene schedule looks like, and how that's being coordinated. We recommend preparing a business plan, right? I mean, whether a lender asks for this or not, it's important for you to understand what that strategy looks like. How do you plan on taking over this operation and growing it, continue to grow with your vision? Understanding the location demographics is truly important. The competitive landscape ties into that, as well as the future growth potentially of that practice. Do your research. Is this a good fit? Does it make financial sense? I think is an important question. I don't think we always ask this. Sometimes we get lost in just the numbers, but does this make sense for you? Location is important. I highlighted that. And the labor pool. This seems to be becoming a more prevalent issue within, I would say we're hearing this across the board. Labor pool challenges in different provinces and trying to attract and retain and hire quality staff. So all important pieces. So last, we've touched on the startup, we've touched on acquisition, we've touched on kind of the macro and the micro lens of what we're seeing. I wanted to just touch on some of our unique value proposition and what you would see with RBC Healthcare. There's a lot of banks in this space. I think our value proposition is quite unique, and I'll speak to a little bit what that looks like. So as Alan had mentioned, I lead a team of financing specialists in the Greater Toronto Region. Relationship managers in the Greater Toronto Region. These folks we have these teams across the country. These teams specialize in healthcare, so they work exclusively with doctors, dentists, veterinarians, optometrists, and some of the allied health services. These are the client segments that we work in, and I think the organization has taken a view that to work in this space, you need to understand the clientele that you're working with, and having that industry specialization, I think, presents itself with quite a unique opportunity and offering. From some of the just the traditional banking items, We have the RBC Healthcare Advantage Pro plan. This is just your accounts, your traditional banking products, right? The only thing I'll say here is because of especially within the dental community, it's a segment where the bank has views tremendous opportunity. Is very heavily invested in this industry vertical, and as such, there's preferred terms, pricing, fee structures that come with being a member of that community. So that's an important note for the offering. This to me is really more relevant because I think we're all familiar with traditional bank products. I think what I'd like to just touch on just for a couple of minutes is just on the beyond banking, right? Because I mean, I'm sure everyone in this room has either bank with RBC or bank with one of the other lenders or financial institutions, and they're offered the similar products and services. This is an area where I think we really excel and have a very unique product and service offering. Group Advantage. So this ties into actually a discussion I was having earlier with one of my colleagues here on staff retention. And what Group Advantage does is it provides the practitioner or the business owner an opportunity to offer solutions for their staff, right? We think about it's tough to continue to pay higher hourly rates for our hygiene staff or our dental assistants. Is there other things we can do as a business to support those staff as a way of retaining staff long-term invested in the business? And the Group Advantage program is a separate group within RBC's commercial banking platform that affords practitioners the opportunity to set up group savings plans and financial wellness plans for their staff. So this is, to me, an idea of thinking outside the box of simply, looking at if the business is not able to continue to pay these higher wages, is there other things that they can offer to provide solutions to their employees as an effort to either attract or retain? I think is an important note. RBC Express. So this is a state-of-the-art comprehensive digital banking solution. We have a new product coming out actually in the very near future called RBC Edge, but it just ties into this idea of being able to manage and run your business. I think what's important to note here is the ability to delegate responsibilities. So if you have office managers, for example, who you want to help facilitate payables or payroll, you can delegate specific responsibilities and maintain the ultimate control, which is at the utmost importance for your business. And then last thing I want to touch on was the RBC Insight Edge. So this is, again, extremely unique. It's a culmination of the bank's ability to collect mass data from consumer spending in different regions, different markets on a global scale, and be able to provide our clients with insights, right? So we think of what's the value add that a bank provides. Like, to me, this is exactly a key area of focus for RBC. We talk about some of the AI-driven technology, investment in software. This is an example of, and I'll just use as an example, as for a startup practice, a practitioner comes to us and wants to have a discussion with an advisor about starting a practice, that we can leverage these tools to have holistic views of regions and specific demographics. What is the average income? What is the demographic of that location? What are your competitors doing in that location? And provide real-time insights to our clients. So again, this is kind of the beyond banking from traditional, when we think of traditional banking, that I think is really what clients have come to expect, really. I mean, I think it's across every industry. And again, this just further kind of enhances some of the RBC insights. If you're looking to benchmark your business against competition, understanding your customer spending habits, where are they transacting, where are they meeting, how do we meet and engage our customers? This all ties in with this collectively. So with that being said, I think that is everything I wanted to cover today. If there are any questions, I'd be more than willing to answer as we go.
Hello, thank you so much.
Thanks, Jim.
So I'm just curious, when you look at clients that you have now, is there an increased level, or what is their comfort level, I guess, in the level of capital that they're willing to, like, basically to become leveraged in right now? Has that changed?
Great question. I would say at least from what we've seen from our end, there probably has been a bit of a lull with the cost of borrowing being where it's been at, right? Regardless of the preferred pricing that the dental clients get, it's still it's a lot, right? When you think of trying to finance either expansion of their practice or acquiring new practices. I would say in the last probably 6 months, with the insights on the downward trending of interest rates, we're starting to see more activity, more interest, volume of transactions in terms of, especially from the acquisition standpoint. I'd say it's closely tied to interest rate. I think valuations are also closely tied to interest rates. As they come down, we're going to start to see values increase as well. But yeah, that's where the sentiment right now is. I think we probably had a lot of folks holding off making, decisions that required a lot of capital until we've seen a little bit of easing on the interest rate pressure. Yeah. Thanks, John.
Any questions?
No?
For
Covered
those
everything.
online, if you need to ask a question, please open up um, your mic and ask the question. No? Okay.
I covered everything. Well, I appreciate everyone's time. If there is any questions or any follow-up